This question tests your understanding of the fixed overhead volume variance, one of the two variances used to analyze fixed manufacturing overhead under a standard costing system. The fixed overhead volume variance arises because fixed overhead is applied to production based on a predetermined activity level, such as direct labor hours or machine hours. The variance measures whether actual production volume differs from the budgeted denominator production volume. An unfavorable volume variance occurs when actual production is lower than the planned production level. Because fewer units are produced, fixed manufacturing overhead is spread over fewer units, resulting in underapplied fixed overhead. Conversely, producing more units than planned creates a favorable volume variance because fixed costs are absorbed by a larger number of units. Students should distinguish the volume variance from the fixed overhead spending variance. The volume variance is caused by changes in production volume, not by changes in the amount of fixed costs incurred. A. The production supervisory salaries were greater than planned. Incorrect. Higher supervisory salaries affect the fixed overhead spending variance, not the volume variance. B. The production supervisory salaries were less than planned. Incorrect. Lower fixed overhead spending also affects the spending variance rather than the volume variance. C. More was produced than planned. Incorrect. Producing more than planned would generally create a favorable, not unfavorable, volume variance. D. Less was produced than planned. Correct. Producing fewer units than budgeted results in underapplied fixed overhead, creating an unfavorable fixed overhead volume variance. Correct answer. D. Less was produced than planned. A $10,000 unfavorable fixed overhead volume variance most likely occurred because actual production was below the planned level, causing fixed manufacturing overhead to be spread over fewer units and resulting in underapplied fixed overhead. This question examines responsibility accounting and the materials usage, quantity variance in a standard costing system. The materials usage variance measures whether more or fewer materials are consumed than the standard quantity allowed for actual production. An unfavorable usage variance is often caused by poor quality materials, inefficient production methods, inadequate employee training, or poor production supervision. However, responsibility accounting emphasizes that managers should be evaluated based on all controllable factors contributing to the variance, not merely the department that physically uses the materials. In this case, several departments contributed to the problem. Marketing accepted a rush order, creating severe time pressure. Purchasing misplaced the paperwork and was forced to buy materials from an unfamiliar supplier whose low-quality materials increased waste. Production bypassed the normal inspection process and used inferior materials in manufacturing, further increasing material usage. The key point is that the unfavorable materials usage variance resulted from multiple departmental decisions, illustrating the importance of cross-functional coordination in variance analysis. A. Purchasing. Incorrect. Purchasing contributed by selecting the emergency supplier, but other departments also played important roles. B. Purchasing and marketing. Incorrect. Although marketing created the rush order and purchasing obtained the inferior materials, production worsened the problem by skipping quality inspection. C. Marketing and production. Incorrect. Production and marketing contributed, but purchasing's mishandling of the paperwork and emergency sourcing also contributed directly. D. Purchasing, marketing, and production. Correct. All three departments share responsibility. Marketing created the urgency, purchasing selected the substitute supplier after misplacing the order, and production bypassed inspection procedures, allowing poor quality materials into production. Correct answer. D. Purchasing, marketing, and production. The unfavorable materials usage variance was caused by a chain of decisions across multiple departments, demonstrating that effective variance analysis should consider cross-functional responsibility rather than assigning blame to a single department. This question tests your understanding of the material efficiency, usage variance, which measures whether the company used more or fewer materials than the standard quantity allowed for the actual level of production. An unfavorable material efficiency variance means that more materials were consumed than expected, indicating excessive waste, spoilage, or inefficient production. The question asks for the factor least likely to explain this unfavorable variance. Students should remember that material efficiency depends on production processes, worker skills, machine performance, and material quality, rather than on whether actual production is above or below the budgeted production level. The standard quantity allowed is already adjusted to the actual output, so differences between planned and actual production volume do not directly create a material usage variance. Therefore, factors such as poor quality materials, inexperienced workers, or new equipment requiring a learning period may increase material consumption, whereas lower production volume alone should not. Inferior materials were purchased. Incorrect. Poor quality materials often create defects and waste, increasing material usage and causing an unfavorable efficiency variance. B. Actual production was lower than planned production. Correct. Material efficiency variance compares actual material usage with the standard quantity allowed for the actual production achieved. Producing fewer units than planned does not by itself cause an unfavorable material efficiency variance. C. Workers used were less skilled than expected. Incorrect. Less skilled workers may handle materials inefficiently, resulting in greater waste and an unfavorable variance. D. Replacement production equipment had just been installed. Incorrect. Newly installed equipment often involves a learning curve and setup inefficiencies that can increase material waste during the initial period. Correct answer. B. Actual production was lower than planned production. A material efficiency variance is based on actual production, not budgeted production. Therefore, lower than planned output alone does not explain an unfavorable material efficiency variance, making B the least likely cause.